In this video, we are cracking the code on an alternative investment that for centuries has been locked behind closed doors. I'm talking about the art market. Now, before you click away thinking art investing is just for the ultra wealthy, hear me out. Art investing is no longer reserved for fancy galas and old wood-paneled auction houses. It's become surprisingly accessible as a way for everyday investors like you to diversify your portfolios and potentially unlock stellar returns. Stick with me as I explain art investing, discuss the challenges that kept it out of the reach for many, and then reveal the exciting ways it's becoming easier to participate. Art has captivated people for centuries. Whether it's from a painting from a friend or a Picasso, it's not just about aesthetics. It's about a real, tangible store of value. Unlike a stock that can plummet with a bad earnings report, a masterpiece by a renowned artist can appreciate significantly in value over time. Studies show that art has historically kept pace with inflation, sometimes even outperforming it. During periods of inflation, savvy investors often increase their allocations to precious metals like gold and other alternative investments like wine and antique cars. These markets move differently from stocks and bonds because they're tangible. You can actually touch and feel them. Before researching this video, I didn't realize that in inflationary periods like 1973 to 1981, post-war and contemporary art not only maintained its value, but it increased its value at more than twice the pace of inflation. Wow, no idea. But what about periods where inflation wasn't running above normal? The Art Basel and UBS Art Market Report in 2024 indicates a recent stagnation. Sales haven't kept up with inflation over the past decade, and contemporary art specifically fell short of its 2013 peak. However, the asset class is attracting new attention from several types of investment professionals, potentially because inflation has been creeping up over the last few years. Credit investors recently purchased $700 million worth of bonds from Sotheby's auction house, which were backed by personal loans made to art collectors. Additionally, in the 2023 Art and Finance report from Deloitte, they state that approximately 63% of surveyed wealth managers have already integrated art into their wealth management offering. In that same report, Deloitte expects the fine art and collectible asset class to grow to over $2.8 trillion, up from an estimated $2.1 trillion today. Just imagine inheriting a piece of coveted art that's been in the family for decades and then running to an auction house for an appraisal. There's probably a feeling of exhilaration and wonder about what it may fetch. After a detailed appraisal, you find out it's reaching $400,000 at auction houses. Wow, I had no idea it was worth that much. And it's not a Monet, Rembrandt, or Picasso. Now what do? How do you store it? You of course need to insure it, or maybe you sell it. Give the auction house a big cut of the sale, and then pay tax on what's left over. There is a lot to consider here. But why have so few people invested in art up until recently? The majority of people who even realize fine art has been an advantageous inflation hedge are already very wealthy. Or maybe they just love art heist movies. Some people think that you need to fully understand the painting's inner meanings to properly invest, and that's false. Many artists have established a level of significance in wider markets. In modern times, you often need millions of dollars to collect top-notch art and often attend a prestigious auction. Most people don't think of art alongside traditional stocks and bonds. These are both reasons why people typically don't invest in art. And that makes sense because this is an illiquid, tangible commodity that's been the crown jewel of billionaire portfolios. Some of the most valuable treasures on this market have been locked away in vaults for centuries. But keeping the general public ignorant of art's investment benefits, in my opinion, is also by design. The rich and powerful often play by a different set of rules, and the art market is no different. Keeping art inaccessible for the general public allows the benefits of investing in art to be secured by only a few people. This makes it one of the best kept secrets in finance. Just like there are firms specializing in clearing up the messy details around investing in real estate, wine, and private equity and other alternatives, there are also professionals dealing exclusively in the world of art investments. What if you could invest in art for under $100,000? Well, now it's possible. Over the past few years, some companies have been breaking down the barriers to investing in art, making it accessible for investors like you and me to participate at a fraction of the cost. One of those companies is called Masterworks, based in New York City. In full disclosure, they are a sponsor of this video and my series on alternative investments. This is in no way an endorsement of Masterworks, but this section is for an education of what Masterworks is and how they've revolutionized investing in art. Masterworks was the first company to actually securitize physical art, allowing it to be broken into shares. This way, investors can more easily diversify into fine art, and specifically blue chip, post-war, and contemporary art, which is the area of the art market Masterworks specializes in. It's pretty interesting stuff. I never could have imagined investing in a fractional piece of a highly coveted piece of art. Masterworks launched in 2018, marking the first ever time a painting was turned into an SEC-regulated fractional financial product that people could invest in. The art market is, of course, highly illiquid. Investing in art is for people who are already building a portfolio of stocks, bonds, real estate, and are looking for additional ways to diversify. If you don't have millions of dollars to invest in one single piece of fine art, but may want to invest in art, Masterworks may be your golden ticket. So let's check out the Better Business Bureau. The Better Business Bureau gives Masterworks an A+ rating. The ratings there range from A+ to F, so Masterworks has received the highest rating. Well, that's a good sign for this company. But how does the Masterworks platform work? What are the pros and cons? Well, let's dive in. Step 1. Masterworks selects the artists. They have a team of analysts that have crunched over 50 years of auction data to locate works by artists with proven track records of price appreciation, auction sector demand, or market momentum. This includes names you may know, like Picasso, Banksy, Basquiat. It also includes names you may not know, like Cicely Brown and Pierre Soulages. Now, I hope I did those pronunciations right. Not really that good with names. Step 2. They purchase the art. The Masterworks acquisition team locates what they believe is a good piece with an attractive value, and they purchase it. To be clear, Masterworks purchases and owns the art themselves before offering it. Now in step 3, the art is broken into shares. This is where Masterworks files an offering circular with the Securities and Exchange Commission, or the SEC, breaking each painting they buy into shares. This is how Masterworks is able to offer pieces worth millions of dollars to their investors at a fraction of the cost. In the description, I've also linked to the SEC page with all their offering circulars. Step 4, Masterworks holds the painting. Now, Masterworks aims to hold a work of art for 3 to 10 years, letting it appreciate and then sell it. If you aren't prepared to hold an art investment for that period of time, then the asset class isn't for you. Now, although plenty of works have sold earlier, Masterworks is not a short-term investment. Far from it, and they'll tell you the same thing. But where is the art stored? Take a look at this gallery. This is one of their galleries on 74th Street in New York City that holds the art its investors own. And if you're in the New York area, you can actually go and visit the gallery and tour your investment. That's pretty cool. The majority of their art is stored in world-class facilities at the Delaware Freeport, covered by top-notch insurance from Lloyd's of London. Okay, let's say you've invested and Masterworks has held a painting for a few years. How do you actually make money as an investor? Well, once you invest, there are 2 ways that you can exit your Masterworks investment and get a return. The first way to exit is for their private sales team to sell a painting you're invested in. Working out of their gallery in Manhattan, Masterworks' private sales team sells works directly to top collectors in the art market. This is how they've successfully exited 22 paintings to date for investors. The second way to exit your investment is by selling your own shares on Masterworks' secondary trading market located on their website. Although it's important to note that this isn't any guarantee of liquidity, you can look to sell your shares to another user with 0 trading fees. It's not liquidity at any time you want it, but there are ways to get out of your investment early. To date, Masterworks has acquired, authenticated, and stored over 400 paintings, some of which you can see in person if you're up for a visit. Masterworks also lends paintings to exhibits and shows like the Walker Art Center in Minneapolis.
I would also like to add that since filming this video, Masterworks has sold another painting in their collection by Jean-Michel Basquiat. The work was held for 1,398 days and returned an annualized net return of 6.3% to investors. Masterworks now owns a total of 13 paintings by Basquiat, and this is the first time they've sold a painting by this iconic artist.
The platform currently has more than 900,000 registered users and is growing by the day. There are 400 plus art pieces totaling more than $800 million in securitized paintings. Users with significant interest in the fine art market can also access their research and up-to-date market data showing recent sales, annual returns, and appreciation of different pieces of art. As a certified financial planner, I have private clients who invested with Masterworks to diversify their holdings. And some of those clients have also seen payouts from the platform after Masterworks sold paintings they were invested in. It shows you that Masterworks process does work, although of course, no investment is a guarantee. Signing up is easy, and Masterworks' objective with this first section is to educate you while gathering information about your investment goals and style. So fill out the short questionnaire and you'll be directed to sign up for a time to talk to one of Masterworks' investment advisors. On the call, you'll work with a Masterworks registered investment advisor to determine if any artworks or markets match your investment goals. Because works are securitized and broken into shares, you can allocate as you need between multiple paintings without spending millions on a full work of art. Masterworks charges a 1.5% management fee per year, which covers the obvious costs like security and insurance for the artwork. In addition, when you sell at a profit, Masterworks takes a 20% commission, leaving you with 80% of the profit. If you're logged in, the first thing you'll see is the offerings page, which acts as the home page. These are older screenshots of the website, as I'm not allowed to show the live offerings since it'd be a regulatory issue, but this is what you can expect to see with different paintings. Typically, Masterworks aims to have 3 to 5 paintings on offer at a time, but that varies, and some offerings have sold out pretty quickly. In my opinion, alternative investments in general, and art specifically, should only represent a small percentage of your overall investment portfolio. Art is a long-term investment, so an allocation should be considered locked up for years. By no means should alternatives like art make up the lion's share of your portfolio. Here are some of the returns for investors on different works of art after Masterworks makes their money. Investors have realized some pretty substantial net returns. The offerings sold after less than a year of holding are shown as a total return, while the offerings sold after more than a year are shown as an annualized net return. Obviously, past results are no guarantee of future performance, and investing involves risk, but each exit so far has delivered to individual investors a profit. Important Regulation A disclosure can be found at masterworks.com/CD. Remember, the reason the wealthy invest in art is often to maintain their purchasing power. It's a way that for centuries has kept up with inflation. Finally, Masterworks wants to offer my viewers an added benefit. With my private link, jump right over the velvet rope. It's right here, and I'll also provide it in the description. And if you're looking for my other videos on alternative investment strategies, check out this video next.